My name is Dan Blondal. I am the CEO of Nano One Materials. Our company is developing process technology to improve the way that lithium-ion battery cathode materials are made. Cathode are the materials that contain lithium, nickel, manganese, cobalt, etc., and that provide energy storing capacity in a battery. And our one-pot process enables us to drive down the cost, the complexity, the energy intensity, and the environmental footprint of making cathode materials to make it cost competitive in the Western world versus the incumbent technology that is used typically in China.
Dan, good to see you again. It's been a while, but I thought it was worth catching up. There's a fair bit of news come out since we last spoke to you, and a lot recently, certainly around funding, etc. But maybe start off and remind people who you are. What's your background relative to what you're doing now, and what is the plan here with Nano One?
So I'm an engineer by training, Matt. Spent most of my life in the technology world, mostly in kind of hard technology. Actually had a little start back in the days in mining. Went off into technology and printing, actually a little bit of nuclear science, before I came back to something that's actually very close to mining here at Nano One. Obviously, we sit between the critical minerals and the battery. We process them into functional materials that will store energy in a battery. And that's kind of a really kind of broad history of myself and what we're trying to do.
Right. Okay. Now, you mentioned this one pot technology. That's going to be part of, because effectively I'm having a conversation today with a company which is around technology innovation and critical mineral independence, which is what people are striving for. Certainly the narrative that we're hearing a lot. So what does this one pot process do?
So for those who of your listeners maybe who aren't as familiar with the details, and without diving too deeply, fundamentally critical minerals like nickel, manganese, lithium, iron are mined, refined. They maybe go through a few refining steps till they get to the purity level that would be typically used in that would be suitable for batteries. And it's at that point that they combined into a precursor. It's called a PCAM, precursor cathode active materials. That's the combination of iron and phosphorus, so the combination of nickel, manganese, and cobalt. Often done in one country by one company, and often shipped out to a different country where lithium is mixed in to make the final cathode material. So that's the PCAM and the CAM process. Our technology combines both of those processes in what we call the one pot process. So we mix lithium, nickel, manganese, cobalt, or lithium, iron, and phosphorus all together in one chemical reaction. And that enables the lithium to be fully incorporated with the other metals, so that in the subsequent steps, which requires drying the powders that are formed in that process and then cooking them in the furnace, the reactions happen much quicker. So that actually drives down the complexity. So we don't need as many plants. We don't have to build as many process plants. We're not using as much energy to drive those steps in the process, and ultimately we're able to form the cathode materials more quickly and without any wastewater. And that's a really key part of what we're doing. The elimination of wastewater and byproduct, or sulfate, sodium sulfate byproduct, eliminates complexity, cost, energy intensity, and ultimately makes the process and any plant we build easier to permit and quicker to come up to speed and operate than a typical process that would be used in China, for instance, that has a separated PCAM and CAM process.
Right. Okay. So I guess de-risking the process is interesting, but to what end, right? So what market are you addressing specifically? Not because these projects need to be commercial, right? And I want to know who you're addressing. I guess some of the clues might be in some of the partnerships that you've got, but can you kind of talk us through that commercial strategy of yours and how you're set up?
So on a higher level, first of all, the one pot process is applicable to various different lithium-ion battery chemistries. They all have lithium in them, but it's the other metals that define the performance of the batteries. But our first big commercial push is in lithium iron phosphate, so LFP, or lithium ferrous phosphate, as it's often called in Europe and here in Quebec as well. And so LFP is the lowest cost and the safest and longest lasting of all the cathode materials. And for a long time in the West, it was deemed as not being energy dense enough. But those problems have been solved in China, and we're seeing really adoption of LFP in China nearing 2/3 of the market. So we don't see somewhere between 60 and 70%. So very, very large market penetration. And we believe that LFP will go that way in Europe and in North America. And it's not a matter of if, it's just a matter of who and when. Do we want to be part of it, or do we want to let China dominate that market? And so what we're focused on doing is developing this process. It would typically be used by a chemical company, let's say a large industrial company, maybe already in the cathode space, maybe a chemical company looking to get into the cathode space, or a large energy company that's looking to figure their future out during the energy transition. So this would include the largest energy companies, largest chemical companies in the world, and a lot of the pre-existing chemical companies. We are developing our process with a partner, Worley, which is one of the largest engineering firms in the world. And we're putting a wrapper around the key pieces of technology, the key pieces of equipment, the intellectual property, the know-how, the engineering drawings, the flow sheets. All of that gets wrapped into a process design package, or what we call a CAM package. And that CAM package is made, it's enabled by the fact that there is no wastewater treatment. Anytime you have wastewater treatment, you have to customize the engineering for every single site you put it on. And that drives up cost, that confounds the financial decision risks. And of course, it makes permitting much longer and much riskier. So by eliminating that risk and eliminating that cost, we suddenly make this modular plant that can really be plopped down anywhere in the world. We do not need to be close to tide line or close to rivers or close to lakes to discharge materials, nor do we need to be close to somewhere where we're going to dry stack the byproduct because you can't sell it, because we don't have any of that. We make a shrink wrapped plant that can be sold and licensed to an operator like I described before. So hopefully that gives you a sense of what the long-term business model is.
Yeah, no, it does. I need to sort of understand where you are today, though, because when I'm reading through the marketing materials that you've got this innovation hub, which I guess the R&D component, and then obviously with Candiac, you've kind of got this. What would you describe it as? A demonstration plant?
Yeah, so maybe I'll give everyone a little bit of context. That's actually where I am here today. So the Candiac plant is located just outside of Montreal, about 20 kilometers outside of Montreal. And this plant was designed and built in the kind of the 2000s and first commissioned in 2012. It was and still is the only LFP plant outside of Asia. And it used a process called a hydrothermal process, like a big pressure cooker. And it is actually, it was also a one-pot process, but it had a huge waste stream, had a big water and sulfate byproduct that came out of it, making the process really unscalable and at the end of the day, uneconomical. It was through a series of acquisitions owned by Johnson Matthey. We acquired it 2 years ago, as many of your listeners will know. And then we walked in, we decommissioned all the wastewater handling, and then we've recommissioned this plant. There are three main components. There's the reactors, and we brought in brand new small reactors in order to prove things out at a smaller, more affordable scale. But the back end, which is these massive spray dryers and furnaces, all of that is operating at full scale. So currently the plant is operating at about 200 tons a year, or the equivalent thereof. We don't operate it 24/7, but it's enabled. We use it for sampling materials out to potential licensees, sampling out to potential partners, and sampling materials out to potential buyers of the material as well. So the plant serves actually many purposes. And we are looking to bring it back to its original nameplate, which is about 2,000 tons a year, somewhere between 1,000 and 2,000 tons a year. And our most recent rounds of funding from government are very much directed towards that part of the project.
So what exactly are they testing? Like, this is a fairly look, it's a big space, but at the same time, it's a nascent industry in many ways. What exactly are these wide range of potential partners testing? What is it that they want from you, and is it one product or multiple products or bespoke products? I mean, how do you work with them?
Yeah, it was a good question, and I think we kind of have to look to our business model, which is there's a hybrid component to there's a production component to our business model, which is based on this plant here, but it's relatively small volume, so that we will be selling materials out to small off takers. They could be earlier stage battery companies. They could be companies, let's say in the aerospace or defense industry. They could be companies looking to establish renewable energy storage market, and specific projects that might be pocketed around North America. Because the plant's not big enough, this plant's not big enough to feed the electric vehicle market. But what we can do at the same time with this is sample materials out to, let's say, electric vehicle companies to put into their prototype batteries in an A, B, and C sample type level. We have enough volume to do that here. It would generate some bespoke revenue that would come in based on spot sales of materials out to these folks. But ultimately, what you'd be looking to do is validate that material in the next gen battery and drive a much larger offtake, which would then be bankable for us to build a much larger facility, which we would do through our licensing partners, through possible joint venture partners into the future.
Right. Okay. So the name of the game here is, well, look, before I get on to that, the Innovation Hub. That is, I guess, an ongoing R&D facility trying to working on whatever this blend of products and services could be. Is that what it does? And who are these people?
That is correct. So the Innovation Hub is actually on the west coast of Canada in Burnaby, just outside of Vancouver, and its focus is really at a much smaller scale. So there we're making kilograms of materials in order to test it internally, test a little bit externally. And then once we're comfortable with the scale, that then comes to Candiac, where we have we actually have full scale pieces of equipment, and we take it right up to the ton level in terms of sampling, and the thousands of tons per year ultimately for to drive our licensing strategy, but also to drive the smaller sales that are naturally going to come out of this facility.
Okay, so that's I guess the brains, the IP.
Yeah.
Then the commercialization, the licensing is where you think the revenue is going to come from. So you look to license this to multiple partners to produce various products, and you sell that well. How do you monetize that? What's the money side of things look like?
For the licensing strategy,
yeah.
What it would be is, so again, as I described before, we have this process design package. It's based around a plant design. We're selling plants essentially, and there's equipment and IP and all kinds of stuff in there. And there would be it would be a licensing fee, and that fee would come in the form of an upfront payment and some kind of a royalty stream that's based on the either the capacity or the production rate of the plant in the future. So there's an annuity stream that would flow in on top of that. There's always an upfront fee because you've got to spend a whole bunch of money on engineering work, and you've got to cover all of the short-term costs to get that plant ready to go, shovel ready to be fully built at that facility. And we will have done a lot of that work up front in this design one, build many philosophy that we have with Worley. As much as we can do up front means we don't have to repeat the engineering. There's a lot of the engineering work that gets in today's world. Everything's bespoke. The engineering gets repeated all the time. We're trying to basically take all of the engineering work that would normally be repeated in these projects and bundle it into a package and sell it. And that way, we benefit from volume plant adoption around the world, because the more plants we sell, the more we benefit from all that upfront engineering.
Right. Okay. And Worley's involved here as what are they bringing to the table?
Well, obviously they bring in a staff of 50,000 engineers, a tremendous amount of horsepower, reputation, and they bring a bunch of customers to the table as well. So they work with the world's largest energy and industrial companies, and so that plays a big role. They actually have quite a big business on the cathode and CAM side of things, PCAM side of things as well, and that's building more traditional plants. So Worley came to us recognizing actually there were some big problems in the PCAM space. It's hard to build PCAM plants in the West because of the waste issues, because of the energy intensity issues, and they recognized that we were able to solve that problem and we're able to kind of package it up in this modular plant. What we do with Worley is we co-develop that modular plant. We co-license it and we co-market it and we co-license it. So we will both benefit from those licensing revenues. The bonus to us is we'll sell more plants with a partner like that. And at the same time, we'll benefit from the sale of equipment, and not just technology, but the sale of equipment. We'll benefit from the sale of the sort of the built-in engineering services and the flow sheets and everything else that are kind of bundled into that. So it's really kind of win-win for us, and it really enables Worley also to reach out and build many more plants than they could have by doing it custom.
Right. Okay. So there's an endorsement there from Worley. I mean, how long have you been working with them? How long have they been involved?
So officially for just not even quite 6 months yet. It's kind of right around 6 months. So we've known them for quite a while. Obviously, it took a while to put the deal together, build the relationship, blah blah blah. But now we are at a stage where we're actively involved. We've got a package that we're out marketing to potential licensees together. So all of that is now in motion.
Okay, and so and what do they get out of it? What's in it for them?
Well, ultimately, they will get the same thing we get out of it. We share in the license fees, the upfront license and the upfront license fees. They will not be necessarily the company that builds the plant. They will probably bid on it in certain jurisdictions. They'll have the right teams, the right EPCM teams to sort of manage and build those facilities for customers. But it's not part of the package deal that we deliver. What we're delivering is a plant. And that plant, a customer would license that. They might become the licensor. They might be responsible for the building and the operation of that plant. And Worley may get a big EPCM deal out of that if they've got the right team in the right location when it's happening. But really, this is a standalone business. This is the same as us. Nano One and Worley have exactly the same benefits here. We're looking to sell licenses. There's upfront fees, and there's an annuity stream that follows that.
Okay. So they're in. Is there sort of an end period to that relationship, or is this that you've now committed for?
It's got a 20-year lifespan to the strategy that we're pushing forward.
Yeah. Okay. Well, it's always I'm trying to get some level of the sense of the endorsements out there, because obviously I think NGen awarded you $2.8 million. We've got the DoD. In fact, tell us about the DoD. $12.9 million US awarded by U.S. Department of Defense. What was that for? And what are their expectations?
So the U.S. Department of Defense made a $12.9 million investment in Nano One, and that's to cover expenses for really the commissioning of the plant that we have here, to take it from 200 tons through 600 up to 1,000 and beyond. So there's a bunch of expenses that are incurred there in equipment and labor and inputs and all of that. So that's what it's directed towards. But really, I think what people are interested in is, why is the U.S. investing in Canada? Why the DoD? What are the strings that are attached?
And why LFP?
Why LFP? Yeah. So look, I think what the DoD are most interested in here is building a secure North American supply chain that can grow on its own, ultimately to improve the security of the North American energy corridor and supply chain. That's what it's about. This is DoD cannot order enough equipment to build a market. they don't buy enough stuff. So what they have to do is find companies they believe can actually build a secure economy that will be ultimately good for U.S. security. That's what's driving this investment. There are no strings attached. Obviously, if we are successful, we will sell product into the North American market. We will buy North American equipment wherever possible. All of that is good for the North American economy, and that's where DoD's interests, are firmly planted.
Okay, and let's talk about obviously Quebec is also Candiac's based in Quebec. They've invested $18 million Canadian
Yes.
into you as well. So again, and they're deploying a lot of capital. It's a great province to work in, but again, why would they do that? What do they get out of it?
Yeah, we just actually announced it yesterday. That's why I'm here in Quebec. We actually had three ministers: Minister of Mines, Minister of Environment, and the local minister here in the riding. And we had Investissement Quebec and a bunch of other folks, and probably 6 or 7 pieces of media came out. And it was a big media event yesterday, very exciting to be part of. I think this is the first LFP bet. Everything that's been announced prior to this has been focused on nickel-based batteries and nickel-based chemistry, and sitting right in the backyard here in Quebec, just outside of Montreal, is this company that built an LFP plant 12 years ago. There's more experience here in the Candiac plant making LFP than there is anywhere else outside of Asia. So it's really leveraging that experience to build up an ecosystem. Starting here with a small plant, I think obviously Quebec's interests are that spills over into larger plants in Quebec as well. And we are certainly very interested in doing that here in Quebec. If the economics and the partnerships and the licensees all prove out, it could, the area is ripe. There's lithium, there's phosphorus, there's iron. All of those are really important elements, and it can all be done right here in Quebec. So that's the interest. It's creating a holistic kind of shrink wrap supply chain that can supply, into the U.S. and into other areas of the world as well. And that is ultimately what the dream here is in Quebec, to do that. They've been investing longer in batteries probably than anywhere outside of Japan. There were battery companies, lithium battery companies in the late 1990s. This plant and its people have its origins in 2002. So it does go back quite a long way.
Right. Technology companies have a nasty habit of being usurped by new technologies coming through. And if you position yourself as a technology company, where's the sustainable business model in here that I need to understand, which says this company's going to be around in 3 years, 5 years, 10 years, 20 years? What is that? What should I be looking to?
Obviously, competitiveness is going to be really key. I think having a good, decent head start over anyone else, creating a barrier to entry, plays a really vital role in establishing it. And then ultimately, it's volume. Once these plants start being built in greater numbers, and there's more product being made with this, it becomes a much harder technology to unseat. And we are really driving costs down to the bare minimum here by essentially it's the cost of the raw materials coming in, converting them to a functional material, and that's it. There's no externalities. By getting rid of the wastewater and all the waste handling, it's very hard to cut the costs any further on LFP. And that so I think by doing that, by being the first there, by having the right patents in place, we've got 40 plus patents. They exist in China, Japan, Korea, Taiwan, India, Canada, the US, and so patent protection plays a really important role. And we have to continue to invent and create new technology that we then wrap into the next generation of our plant. So continual improvement is going to play a vital role in this, in making this sustainable and long-term and long-lasting.
Okay, let's talk about that, because I get the first mover advantage. I get the land grab with Worley, helping you out on that one, and that is a great barrier to entry for others trying to come through. Is the innovation, the evolving technologies, because batteries themselves are going through a period of having to come up with different use cases for cars. People think of energy storage, etc. There's lots of use cases yet, I guess, to be even thought of. am I looking towards, well, what am I looking towards within your organization, which says you're going to be able to adapt and move with the times with the, as far as the innovation,
Right.
it, yeah,
Well, we've
in
already,
progressing.
Matt, we've already actually made. I wouldn't say they're not really big shifts, but the technology, as I said earlier, is adaptable to different chemistries. So we have worked on manganese-rich chemistry, on nickel-rich chemistry. We're now working on iron-rich chemistry. I think there's applications in sodium-ion. We can see next generation LMFP as a potential product going through our plants. All of these are super important to what's going forward. And look, there is no winning chemistry out there. We need them all because they all have different properties. They all deliver. They all address different different types of batteries for different types of applications. So we need them all. It's not like LFP is going to get replaced by something else. It will. It's a super important in anything that's where you have heavy duty cycling of the battery, sort of any heavy duty applications. That would include things like buses and forklifts and energy storage for grid and renewable, but it also includes the whole mass market in electric vehicles. Small batteries that need to be charged a lot. Those are going to play a very important role. So it's one of the reasons we chose LFP, but we have this adaptability to all the other chemistries as well. And I think that's what makes this technology, the one pot technology, very robust. And again, one of the reasons that we're partnered with Worley. They see these next generation generation plants moving towards one pot for nickel based and manganese based and sodium based technologies, and it's why we're partnered with Sumitomo Metal Mining as well. They're a multi chemistry company looking to have a play in all these areas. They know they've got to get rid of wastewater if they're going to expand around the world, and to do that, they need technology that will adapt to the local permitting regime that we have that differ a little bit in the West, but differ tremendously from what's in Asia.
Okay, and is anyone else doing what you do? What's the competition look like?
There are a number of other plays out there looking to improve the way cathode materials are made. I would say some of them struggle with scale. Some of them struggle with just trying to. They're more or less just copying what's in China right now, and I think those are going to prove to be very difficult to commercialize in a Western sense. It's going to take really a truly hard look at the cathode making process. If anyone's going to make a substantial difference, and it's got to be scalable. Can't be an equipment. Can't be in a plant where you need 10,000 pieces of the same equipment. That doesn't scale. So it has to be at a scale that works. I mean, we've developed this very much with the mind that a 25,000 ton plant can be done with two duplicates of two major pieces of equipment. And because you can only effectively do this stuff at scale, you have to be using the largest pieces of equipment in the world, really, to be driving the kind of scale that the automotive and the energy storage and renewable market needs. So, anyone who is in this space, who's listening to this, I think those are the key things. It's imminently got to be scalable, and you got to be thinking about the kind of volumes that the world's going to need, because it is a volumes game. Cathode is not a high margin business. It's a volumes game. And that mistake has been made many times. And we look back on history to look at that and say, it doesn't make sense. Like can't expect ever to get high margins. There might be short-term high margins that come out of this, while demand outstrips supply. But ultimately, you have to be building a supply chain here that can grow robustly in a low margin market. And that's all about volume. And LFP is perfectly set up for that.
Right. And I say to investors, don't invest in anything you don't understand. So what is the thematic that investors are investing into when they think about investing in Nano One?
Well, I think there's a pure play component to this. I mean, there isn't really anyone else kind of taking PCAM and CAM and sticking it all together into one pot. Pardon the association, but really and driving a wholesome supply chain play here. This is not just a technology play. We're innovating in the supply chain. I think we're very attractive to the DoD industry, the U.S. Government, the Canadian government. I think the same will play out in Europe as well, because we can bring something that decouples from these really risky supply chains. So there's a thematic playing out here. There's a cost and environmental component, but there's also a security component to what we put together, because ultimately it makes sense. We have a process and a technology that plays into the local supply chains and actually unlocks value, let's say in upstream with critical minerals. We make LFP if we really make LFP move like we think we can, we think that will then unlock, let's say, phosphorus mining in North America. It'll unlock iron supply chains and technology to process those. So there's a whole bunch of really spin-offs that happen here once you fundamentally change and plant LFP into place. And the same will happen with the nickel frontage too, as we change those. So that's actually a very broad investment thesis, but I think that's the way I think investors have to look at what we're doing. We are right at the core and the center of this, and it is very much a pure play in the space. And the cost advantages that we have over the incumbent technology are quite tremendous. We just announced, we just put out disclosed a report that we did with Worley, an internal report that we're out marketing to others now. And we disclosed a little bit of that in a news release a couple weeks ago. And it basically demonstrates the case for a one-pod enabled LFP plant with up to 30% reduction in capex, with over 30% reduction up to 30% in opex, over 30% in capex, and up to 80% energy reduction, which of course has big GHG and cost advantages as well, and ultimately makes it easier to permit. And I think that's going to be one of the key advantages here.
Dan, appreciate your time today. Nice to hear that update. I'd love to kind of do a deep dive into some of those different aspects we talked about today, but when we have a bit more time. So thank you very much. Have a super Christmas break if I don't speak to you before. And let's talk again soon, please.
Yeah, thanks, Matt. You as well. I do enjoy the holidays, and I hope to speak to you very soon.